Hello, I'm Greg Hunter. Thank you for joining us today on USAWatchdog.com. With me, the owner and founder of TheNoteHouse.us, Fabian Calvo. His company buys and sells more than $100 million of distressed debt in real estate a year. He hails from, the Tampa Bay area. Fabian, thanks for joining us today.
Thanks for having me on, Greg. It's always a pleasure.
Well, the Federal Reserve Chairman Ben Bernanke testified last week in front of Congress, and this is amazing, and I think it's too stupid to be stupid, but nobody questions him about spending $40 billion a month buying the mistakes of bankers, the toxic mortgages that were supposed to be AAA rated. I'm sure he's just doing this to prop up the banks, but now I'm hearing the rumor is it's not $40 billion a month; it could be as much as $80 billion a month. What have you heard about this? Do you think there could be any truth to that?
Oh, I believe it 100%. I mean, I've always said that we only really hear a little of what, as little as they could possibly tell the American people about what's really happening. But look, when it comes to the mortgage-backed securities, you look at the past of the Fed. Ben Bernanke said he wouldn't monetize the debt. He swears before Congress that he won't do it, and he does it. He said they weren't going to bail out banks in Europe. They bailed out banks in Europe. In America, the banks have been recapitalized with all these bailouts and everything else. In Europe, they haven't been recapitalized. So I wouldn't be surprised if Bernanke is also buying MBS in Europe as well, with all these banks that have a huge crisis over there. And trust me, Greg, there is enough troubled assets still around for the Fed to be buying much more than the $40 billion a month.
Well, we keep hearing that, we have a rebound in the real estate market. I mean, home starts are off, still by 60% off their highs. If you take a look at, what's a buyer's market? Well, really, here's a headline out of USA Today. It says here, basically, good luck finding a home. Good luck finding a home. And, when you take a look at this headline in USA Today from last week, USA Today, you would think that, oh, my gosh, there's so many buyers out there that all the homes are just coming off the markets. But not true. The headline is very deceptive. The real reason why, good luck finding a home, this headline, is because a lot of people are underwater. Many people are underwater. They can't sell their home unless they bring a check to the closing table. What's going on in the real estate? Do we have a bona fide rebound in the real estate market?
Well, it's all manipulation. First, let's talk about how almost brilliant it's been, this propaganda of there's not enough homes and there's this buyer demand. Well, with the most startling fact that in markets like Phoenix or in Orlando or just other, big metro markets, 50% of every home buyer is a cash investor. In some markets, Greg, it's 70% of all the sales are cash buyers, big money institutional players pouring billions of dollars into the real estate market.
So that's just
that's what it is.
That's just people saying, hey, you know what? I'm going to, get into tangible assets. And
here's what it really is, Greg. What it really is a lot of these big money players that are able to get 0% loans from the Federal Reserve. That, to me, is a signal that they know the Fed is not only going to keep rates at zero, but they're going to keep up this manipulation and do everything they can to see a rebound in housing prices. And then when we see that rebound, we see prices go back up, they'll sell into that market. And, they're in essence creating another bubble. They're hoping for people to rush in, and at some point, I believe, 24 to 48 months, they'll pull the rug out again, and we'll see prices go down when rates go back up.
Well, here we have Ben Bernanke saying, in 2007, the subprime market was going to be contained. I don't see any bubble at all whatsoever. No, here he is in Congress again saying we have low inflation, which is a joke if you fill your car up or go to the grocery store. And also, I don't see any bubble in the real estate market. And you say?
Yeah, well, no, there's a bubble forming. Anytime you have still trillions of dollars in toxic assets, and you have the banks being basically lent cheap money to keep those, they're in essence zombie banks, keep those books, keep those bad loans, all those REOs on their balance sheets. That's not a free market. So under any normal free market condition, Greg, we would have hundreds of banks going out of business a month, being bankrupt because they can't, and then those assets being sold into the market and prices crashing. So instead of doing that, the banks are able to hold back on the foreclosures. They're able to hold back on all these troubled assets because they're getting all this cheap money from the Fed, and they're releasing inventory into the market very slowly. as the Fed and their inflation mechanisms have housing prices increase. So it's probably one of the most manipulated markets currently, but, just like the stock market, we know that the only reason the stock market's now at all record highs is because of the inflation being caused by the Fed.
Well, there's also the notion of zombie mortgages. In other words, people move out of the house, they still hold the mortgage, they quit paying it, but the banks don't really go in and foreclose on it. They just pretend that somebody is there, and they're holding.
Oh my God, yes,
Is
that's
that what's
happening
going on?
huge. I mean, there is take a state like Florida. 20% of the homes are in foreclosure. Roughly half of the homes are underwater. Now, factor in all the other states with properties that are still underwater. I mean, it's millions and millions of homes. That's not even part of the so-called shadow inventory. I put the shadow inventory at over 20 million houses. Houses that are not on the market, sitting either vacant or have somebody not paying a mortgage. Homes that are also not in foreclosure. It is tremendous. We only have about 2.5 million homes that are in that foreclosure process, but there should be tens of millions of homes in the foreclosure process. But what the banks have found out is this. They've gotten smart to it. So they said, okay, we need to do everything we can to make values go up, and then we'll unload all this garbage that we have. That'll be the right time. And that's exactly what we're seeing. We're at the beginning of that right now, Greg.
You think they may run out of time, Fabian? You think that there could be a big dollar sell-off, a big treasury market sell-off, that they could, they might be forced to have to sell assets to raise money to pay interest on these giant reserves, excess reserves being held in the banks? Or isn't there some sort of black swan that could break this up?
Yeah, I mean, there's tremendous black swans. Of course, there could be another terrorist attack. There could be another 9/11. There could be events that completely melt down in Europe and cause a panic. It could be so simple as the Chinese minister coming out and saying, hey, we don't really trust the dollar that much. We'd like to maybe petition for a world reserve currency. What does Europe think about that? So, yeah, there are all kinds of black swans that could potentially happen that won't allow them to get away with what they're trying to get away with, right? They're trying to reinflate the housing bubble like they tried to do with the stock market bubble. That's pretty obvious to keep this all afloat. If rates go up, it will implode their plans of trying to create this new bubble. That's why I don't believe rates will go up unless there's some kind of currency crisis, some kind of an emergency that goes on. I don't see rates going up for years. I don't even think for the next 3 to 4 years, because, Greg, the bottom line is this. 1% increase in interest rates means that our debt service on the government debt goes from roughly $4.5 billion, $450 billion, to $1 trillion a year just in debt service. It's unsustainable.
1%.
1% interest rates can mean that, and it means that we're doing a stimulus package a year just to service the debt. Just can't happen.
Well, let me ask you this: if you think the Fed is buying more than $40 billion a month in mortgage-backed securities, okay, more than, and their official statement on their balance sheet is around $3.1 trillion, a little more than $3 trillion.
Yeah.
Then, is their official statement a big fat lie? Do you think their balance sheet really has more off-balance sheet than really what they're saying, which is bad enough, $3 trillion, dollars in toxic assets?
Yeah, I mean, it started at $800 billion, and now it's at over $3 trillion. It'll likely be over $5 trillion by the end of 2014, in my opinion, the direction this is going. But yeah, absolutely. Look, the Federal Reserve has a bunch of different offshore companies, a bunch of different spin-off companies. Remember, it's a private conglomerate of the big mega banks, right? And we already know through zombie banking and other ways, other methods that they use, they, in essence, hold a lot of these toxic assets offshore in entities that are just sitting there, and that's what they do. So, yeah, of course, I think when eventually there is, because I'm still calling my currency crisis. We're still going to go through that. I believe the world reserve currency will cease to exist as a way it stands in my lifetime, likely in the next 10 years. So we're still going to enter some kind of event that really makes this thing fall apart and needs to be rebuilt. What that is, I don't know. But after that period of time, I think the real level of criminality, Greg, will come out and really expose what these people were doing, kind of like an Enron, right? It looked like everything was great. When it falls apart, then you really realize what level of corruption and deceit was really taking place.
Enron, only 1,000,000 times worse.
Yeah, a trillion times worse.
Fabian Calvo, thenotehouse.us. Thank you for joining us today on USAWatchdog.com.
Yeah, I appreciate it, Greg. And listen, if anybody is interested in learning more about the real estate market and monetizing the real estate market, because there is tremendous opportunity for people to get in and out of this market before, the proverbial SHIT hits the fan, go to thenothouse.us. You can get more information. Click one of the links that I have there.
Money back guarantee, I take it?
Oh yeah, it's a real estate course that I put together that teaches people basically to do what I do every single day. It's called the Resourceful Real Estate Academy. If they don't like it anytime in the first 30 days, they send me it back. I refund them the whole money, but I think they'll find it one of the best real estate courses that's out there.
All right, Fabian Calvo, thenothouse.us. Thanks again for joining us today on USAWatchdog.com.
Thanks a lot, Greg. Always a pleasure.